From our world headquarters in New York, it's Bloomberg surveillance. Futures flat. Let's call it flat. Dow futures -4. Bond market yields just a touch higher after the difficulties of yesterday. He is a policy advisor to Goldman Sachs, a former S.E.C. chairman, Bloomberg board member, Arthur Levitt. Good to see you again.
Good to be here, Tom.
I mentioned in the script a détente between C.F.T.C. and S.E.C. They're testifying today. They're meeting. What is the event today?
Well, there's a round table today, and the topic of the round table, typical of all Washington round table, is kind of the benign notion of how can we harmonize the regulation of commodities markets and equity markets. And in my book, it totally misses the point. We made a similar effort at doing this some years ago. We locked it up and we said we are not going to merge these two agencies, but by coordination we will march into the sunset. Well, a number of people who were there at the time, including Annette Nazareth, who is testifying today, understand professionally how impossible a job this is, because to do this right, no matter what the chairman of either of those agencies have to say, the Congress has to act in key areas.
Let me frame this. The S.E.C. back to, 1933, 34. The C.F.T.C. is the new kid on the block. Not only are they apples and oranges, but isn't the S.E.C. a dramatically larger organization than the C.F.T.C.?
Yes, but that's easy. You could pour more money into the CFTC and say, be stronger, fellers, and do a better job. But that's not the issue. This is a far more sophisticated, more pervasive issue and goes to the whole area of regulating our markets, which we're not doing very well. The differences between the two agencies include investor protection standards, insider trading prohibitions, of which there are none at the CFTC, customer protection, margining and fungible products, and common clearing. And just look at investor protection standards. The agencies and the statutes have long taken a very different approach to customer protection.
What does the CFTC want to get out of this? I think we all understand the S.E.C. is trying to resurge after a difficult number of years. What's the goal of CFTC in this roundtable or within the debate of 2009 and 2010?
You're talking politics, Tom.
Yeah.
And that's less important here than substance. The notion that an investor in a security product receives protection that is not available to investors in a futures product goes to the very heart of what our system is all about. What the regulators want to get out of it is some kind of a meeting of the minds. They want to do much more talking at than listening to, because they can't do it themselves. As good and as strong as Mary Shapiro may be, or the chairman of the CFTC may be, we need the Congress to step in there and call for central clearing, to call for insider trading statutes, to change the notion of a CFTC which has principles-based regulation and an S.E.C. which has rule-based regulation. The whole question of customer protection and margining is fundamental to this. In the futures markets, margin guarantees the performance of the futures contract at its termination. But because contracts are typically closed out before delivery, the loss or gain will be the difference from the closeout price, which is likely to be a smaller amount than the fully committed price.
Is this like an op-ed piece? Is this something you're working on right now?
No, this is part of the testimony that is going to be given today, largely constructed by Annette Nazareth, the head of the Division of Market Reg.
But Ken, this is important. This is a big deal, isn't it? I mean, this is the first turf war of this future of regulation, isn't it?
It's a very big deal, but it's a turf war being fought by people and agencies largely unable to resolve the central issues.
Because since I've been in the business, this has been a huge unresolvable issue essentially between Washington and Chicago, right?
Congress has got to say, for instance, should we have prohibitions against insider trading using the futures markets?
Well, don't we already?
No, we don't. We have them in our equity markets. We don't have them there. We have a SIPC for securities investors. We have no SIPC for future markets. We have certain standards for dealers, market makers in our securities markets. We have very different responsibilities. It's a more professional market in the futures markets. But more and more Americans are being involved in these markets in different areas and different aspects.
Whether you know it or not.
Yes.
Yeah.
We've got to do something about that. And who are the we? It's not Mary Shapiro. It's not Gary Gensler. It's Barney Frank. It's Chris Dodd. Congress has got to address these fundamental differences before the agencies themselves can get down and dirty.
Well, kind of going into the big picture here, Arthur, we have a study today from a progressive think tank that CEOs of the 20 banks who got government bailout money were paid something like 37% more than the average for CEOs whose companies in the S&P 500. This is sort of more fuel on the fire, isn't it?
The two biggest issues, I think, that have impacted various elements of our financial markets in the past number of years, by far and away the most significant is compensation. And after that comes issues such as AIG. Certainly for Goldman Sachs, where I am an advisor, those two issues have punished the firm beyond, in my judgment, beyond rational considerations. But you raise the issue of compensation in terms of its overall picture. It sticks in the craw of the populist world today, domestically and internationally. And we have not heard the end of it yet.
Arthur, let's come back and continue this. Arthur Levitt with us, folks, for this half hour. Don't forget, we talk autos with our Jerome Levin in the next half hour. Henry Kaufman with us in the 8 o'clock hour. Folks, Bloomberg Surveillance in New York, Ken Pruitt and Tom Keene. Want to make an important program note. Of course, we're on 7 to 10 a.m. on Bloomberg Radio. 9:37 this morning from London. Neil McMahon will join us on the British petroleum discovery in the Gulf of Mexico, roughly 7 miles beneath the surface. Neil McMahon's thrilled to have him on later this morning. With us still, Arthur Levitt, the former S.E.C. chairman. There's a salacious part of the Madoff scandal. They showed the house yesterday, right? You know, Gigi Stone was out there.
The house in Montauk.
The house, forget about that. I mean, people like it, people don't.
One thing, though, if you want to show off your money, don't you go to Southampton instead of Montauk?
I don't know. But
okay.
This is serious, though. The S.E.C. is finally going to get something on the desk on this.
Well, what's happening is the Inspector General of the S.E.C. has a report, I understand, on the desk of the chairwoman that outlines his investigation into where the S.E.C. failed. That's going to be a scathing report which criticizes S.E.C.'s going back to the early 1990s. That takes in the incumbency of probably 5 different chairmen and God knows how many commissioners and heads of enforcement.
We get a lot of mail in, pro-Arthur, anti-Arthur. It's like Ken and Tom. He gets all the love notes. I get all the hate mail.
Right.
You get them both. and within your career in perspective, chairman or chairman, they've got to do what chairmen do. Where did the S.E.C. go wrong?
Well, I think clearly in recent years, there were a number of red flags flying. Harry Markopolos did a great public service. The bureaucracy, the lack of funds, the poor management, and maybe most importantly, the downgrading of the enforcement effort in most recent years provided an environment where this massive slip-up could have taken place. Now, keep in mind, Enron, WorldCom, Teapot Dome, Tino DeAngelis, any scandal that you can name, the scandals of the century, they weren't discovered before. They were discovered after they hit the papers, after everybody marched in and complained. None of these agencies discovered these frauds before. So I think it's unfair to say, look, the S.E.C. had this, that, and the other thing. So did the U.S. Attorney's Office. So did the FBI, because all of this stuff comes out afterwards.
I think we talked about this before, Arthur, that most of the complaints that come into the S.E.C. are along the lines of, he told me to buy this stock and it went down. And in the case of Madoff, there was no reason to complain. Yeah, until the whole thing blew up because nobody was losing any money.
But there was a very wise complainer who not only complained through the years, but did an extensive study which really nailed Madoff. And if it had been read by people in the enforcement division, by any of the people in the executive office of the commission, clearly they would have acted. But the story of slipped investigations, which brought about all of the terrible scandals of our time, is legendary. The issue here is we've had very few Bernard Madoffs. It is so egregious, it is so outrageous, it has hurt so many people that nobody looks good. The S.E.C. cannot say, we slipped up. They slipped up big time. And any of us associated with that agency, from chairman on down to the lowest level, bear some portion of the responsibility and some large portion of the embarrassment.
We'll continue this discussion, I'm sure, once we see or hear about the Inspector General's report. Arthur Levitt, thank you so much for